Good afternoon or late morning, everyone. Welcome to Friday. We did it. My name is Tim Sarantonio. I'm Director of Strategic Partnerships at Neon One. I'm really excited for today's panel as part of our ongoing NPO's Rise campaign to just kind of help organizations navigate through these, pick your overused word, unprecedented times. I'm going to go with unprecedented today. So this one's really interesting. I'm really excited about the panel that we've put together, unpacking the impact of the Universal Charitable Deduction. Lot of interest in this one today. A few housekeeping items before we dive in formally. First and foremost, this is being recorded right now. Yep, I can confirm that. We will be getting this up onto our YouTube channel. But GoToWebinar is kind of nifty too, because once it processes automatically, if you go back to the registration page, you can actually also get it on demand there too. But we like to put it into YouTube. And we're going to be following up. These are just kind of general thought leadership items. We're not talking about any of the Neon One products or anything like that today, because this applies to everybody. It doesn't matter what software that you use. Got to talk about it though, in terms of the Neon One ecosystem, who's bringing this to you. We provide a wide variety of technology and services for mission-driven organizations. So we have a CRM, peer-to-peer fundraising, arts and ticketing, giving events, program management. But we also work with a wide variety of experts, and we're drawing on that for our panel today in full. So really excited about the folks that we have with us today. We have John Biederman from the Biederman Group, Ellen Bristol, Bristol Strategy Group, and Alex Wilson of the Giving Block. I'm going to turn it over to John to do an introduction of who you are, and really excited to have all of you here. John, we'll start with you. Tell us a little bit about yourself.
Sure, yeah. Well, first of all, I just want to say thank you, Tim, for the opportunity to be on this webinar today. It looks like we have hundreds now. We actually can say that. Hundreds attending.
Hundreds now.
Thank you for spending your time and during this really unique situation. My name is John Biederman. I am the president and CEO of the Biederman Group. But for many out there, I actually, for the last, as of January, for 25 years, I was with Donor Perfect. Actually wrote Donor Perfect online 20 years ago. But now I'm out on my own and doing these webinars at home. I'm a big Phillies fan. Well, there we go. I'm a big Phillies fan from Philadelphia. So excited about joining and unpacking really all this, because there's still some uncertainty in the act, which we're going to talk about.
And this is what I love about kind of what we're doing now, is that even though John and I have technically for previously be considered competitors in many ways, it's the friendliness and the work that we've done on the Fundraising Effectiveness Project, the Giving Institute, that was like, there's no one else that I want to have on this webinar when it comes to this type of thing. So really excited for your participation, John. Ellen, we'll kick it on over to you. We're going to go with the pictures. I just randomly put them in there. So Alex, don't feel bad that you're the third.
No worries.
Just an introduction, right?
Oh, absolutely.
Yeah. Hi, everybody. I'm Ellen Bristol. I founded Bristol Strategy Group 25 years ago. But I also have worked many other years of my long and checkered career in the information technology space and in corporate sales. But for the past 25 years, Bristol Strategy has focused on improving performance and performance management in the nonprofit sector, and especially in fundraising. And I met John the first time at a Giving Institute session way back at Napa Valley. I hope you remember that.
Oh, we were playing guitar.
That's right, I'd forgotten that.
And I've gone ahead and shared my my screen for.
Oh, great!
I thought I did that before, but not. And just one other item before we pop on over to Alex is that the handout is attached to the GoToWebinar interface, and there's some basic information, of course, but there's a great resources section in there that we thought we put together specific about this topic. So that's a good reason to download the handout. Alex, let's kick it on over to you and tell us who you are.
Sure. So actually, before getting into the nonprofit world a couple of years ago, I was a management consultant for Fortune 500 companies, focusing on different emerging tech like AI, IoT, blockchain, cryptocurrency, and then got really sucked into the world of blockchain and cryptocurrency and how that can help nonprofits in a lot of different ways. And then ended up co-founding the company I'm working with now, The Giving Block, with a friend of mine from college, Pat Duffy. And now we're making it easy for nonprofits to be able to accept Bitcoin and other cryptocurrency donations. So really excited to be here and give kind of a unique perspective on the markets and the economics of it.
Yeah, I'm so really excited for this group, and we're gonna kind of have some general questions. I am checking for your questions too for our panel, but we're gonna have an organic conversation over the next 50 minutes or so. But we're gonna kick things off and basically go, you join this. You might have heard of the Universal Charitable Deduction, or you might have went like, hey, I want to learn about that. What is that? How does it affect me? So we're going to start off with the basics of what is it and why should nonprofits care? And John, I'm going to kick this over to you first.
Sure. Thanks, Tim. So what is it? It's actually section 2200 of the of the code in the CARES Act. And it's interesting because you do need to make sure that one reads this, because it's actually different from some of the summaries that are out there. But the gist of it is that it allows a $300 cash only, so it can only be cash, donation for all eligible individuals and non-itemizer individuals. So these are the folks that do not have enough, they're taking the standard deduction, and they don't have enough other tax deductible items to itemize. It's interesting because of a number of reasons. Is that there's actually no guidance if this applies to tax return or to joint married separately or as a joint account. And so that's right now we're still waiting for guidance from the IRS. I expect it'll actually be $600. Typically that's how it works in the past. But right now, as it reads, it's $300 per non-itemizer eligible individual is actually what it says. And then the other thing that also is important is that the universal tax charitable deduction has been something that the industry has been looking for at a long, long time. And I'm sure, Ellen, you got experience, Alex, et cetera. And so it's great to be in here. And the other unusual thing that is in this act is the way that it's worded, is that the text is passed, it applies to tax years after December 31st, 2019. And unlike the other provisions in the act, it is not temporary. So the hope is that not only will it extend for year after year, so that there will always be a charitable deduction, so that people, no matter what they're giving, will be incentivized to give through the charitable tax deduction, but that it also could potentially be increased, potentially in follow-up years. And then finally, there's other provisions of the tax that are a little bit less minor, but for individuals, you are allowed to take typically in any given year, it's up to 50% of your what's called adjusted gross income. This year and this year only, it's allowed up to 100%. And then corporations can also go up from 10%.
Oops.
John, did we lose you? Because he was on a roll right there.
Oh, here he is. Yeah.
Oh, you're coming back. I mean, this is just how things are when it comes to technology. So what we'll do is as John kind of gets reset, there is actually a question that came in, Ellen, that I'm going to kick over to you.
Sure.
John?
Oh, we just lost John almost completely.
Battery, he might be trying to hide his video to help with the bandwidth.
Okay.
But, well, okay, so somebody did ask if he can repeat the info. If we get him back, we will gladly have him repeat the info and beyond. But basically, Ellen, somebody's asking, let's start to talk about why this is a big deal in general. from your
Yeah,
perspective, Ellen, why do you think allowing people to not have to itemize and be able to claim something, is that going to spur giving in your opinion?
I think it will. I'm still not entirely sure if the expansion of the charitable deduction to the extent that people didn't have to itemize unless it was above a certain level.
Yep.
I think that we had a mixed response to that. A lot of us expected that to pour cold water on charitable giving, but it seems like it hasn't had that bad an impact. The reason I think this new temporary charitable deduction, although it's a very modest amount of money, is going to have an impact is that the outside of the nonprofit industry, an awful lot of people don't appreciate how much money it takes to run a nonprofit and have any mission impact.
Yep.
And there are Tim Delaney from the CEO of the National Council of Nonprofits has said he walks the halls of Congress and people say, "You mean it's an industry? You mean people are employed?" So no matter how modest this deduction may be, I think it really sends a message. Guys, government can't, won't, or shouldn't pay for all of the social services, arts and culture, and so on. So let's remind people that it's good for you. It's good for your tax return.
Yep.
And it's good for your, soul.
Yep.
We lost you there for a while.
Hey, John, are you back on the audio? Because I don't hear you, but it looks like you're trying to talk.
It's because I'm talking to my kids to make sure they're not playing Fortnite anymore.
Oh. Oh boy. And you were on a really good roll, I will say. Somebody said that if it's helpful, we lost them at the AGI information.
Yeah.
Okay. Yeah. Well, do you want me to start from there?
I wouldn't
Yes,
mind.
please.
I was like on the edge of my seat when it came to.
This is exciting stuff. I mean, we could really nerd out, but yeah, it was basically for, if I'm doing this correctly, looking at my notes, because we actually do come prepared here for these webinars.
And it is just, and to make a clarification, it is a permanent. We're at least interpreting the language that this is going to be permanent, not temporary, right?
That's correct. So one of the key things here is that it's as written. It says that it's passed, applies to tax years after December 31st, 2019, which has two things going for it. A, unlike the other provisions in the CARES Act, which are set to temporary, it's very clear it's set for temporary for 1 year. This is actually does not have an expiration date. And not only that, the amount does not have a set amount other than as defined for this year. So the goal is that not only will this continue if nothing happens, which it should continue if nothing happens, because that's the way it's written, and that the amount can actually go up, which would be a win-win. So, for all intents and purposes, you have to have be a non-itemizer, non-itemizer eligible individual. You can take $300 for that individual, and it has to be in cash only, no stock, and also it has to be to a 501c3. So this means that typically most GoFundMe's and stuff like that don't qualify. Actually has to be to a real charity, and then also it cannot be to a donor advised fund, which typically that is not the case. You can do that. But in this certain case, the $300 per person cannot be to a donor advised fund.
So, and somebody asked, can you give an example of how this actually would work, in practice? So I'm going to file my taxes. What's the situation that I'm doing here?
Well, sure. So what really should happen is if your tax accountant will ask you, or your software tax, like TurboTax is a great tool, will actually ask you, did you give any donations this year? And it'll say, congratulations, because you do not itemize, up to $300 in donations will be deductible. So what this really means, though, is that if you're not itemizing, then typically, but not always, you're not going to be in the top tax bracket. You're probably going to be somewhere between 10% effective tax on your AGI, so adjusted gross income, up to maybe 20% or so. I mean, it depends upon your situation, if your house is already paid for, or if you own a house for that matter. So with that, typically, if you're not itemizing or you don't expect to itemize, you can give $300. And in essence, you're going to save whatever your tax rate is on $300. So if you're in the 10% bracket, you save $30.
Yep. And somebody asked, is it a credit or a deduction? This is a deduction.
It is a deduction. It's not a credit. One of the goals of the industry is to make this some kind of a credit, so that giving becomes a learned behavior at an early age. But we're not there yet. I think we have to take just one step at a time.
Baby steps. And okay, and we'll kind of get to the handouts, but I wanted to kick it over to Alex for a moment to just kind of, get your perspective as somebody coming, from the financial industry into the nonprofit space. Kind of, what's your take on all of this?
Yeah, I specifically want to touch on one of the points that Ellen mentioned around the awareness that this creates for the average person about the ways they might be able to save on their taxes by giving. I think especially with younger donors, I think the average person, their 20s and 30s, let's say, is much less likely to realize there are maybe tax benefits of donating. I just don't think that's top of mind, even when they're, maybe donating on social media. It's not always that obvious, right, on a nonprofit's website. And I think there's a real opportunity with this new bill to kind of educate the average person that, hey, at the very least, you can probably not save $300, but get a deduction of $300. So I think that is probably a really significant point of this. And especially when they're being reminded in things like TurboTax, that's just another reminder like, oh, maybe I should be donating, right? I can reduce my taxes a little bit. So I think from that perspective, it does have a big impact.
So I want to shift into, and I'm going to share a slide because we've had a few questions relating to this that I think all of us will be able to kind of unpack. So I'll go share the slide again because we did anticipate these questions, which is, and somebody asked, does this begin tax year 2020 or is it retro to 2019? It is 2020. 2020. So great. This sounds like a very, very nice thing. How do you make this digestible? How do people actually talk about this? Like, are they putting the words, Universal Charitable Deduction in appeals? Are they putting this in receipts? Like, where does this go? How does this actually get used? Or is it more, I'll just leave it there because I have some thoughts on it.
Can I take this first?
Yeah, I'm going to kick it over to Ellen for this one. Yeah.
Yeah. Okay. Well, the first thing is that I fear far too many nonprofits don't know how to talk to their donors in the first place, much less about the Universal Charitable Deduction. So the first piece of advice we have to grapple with is, what do you know about your donors? Do you understand the motivations of your ideal donors? And if you don't know that, don't tell them stuff, ask them stuff. In the halcyon days when everybody could itemize their charitable deductions, we found out that unless you were wealthy and giving away a great deal of money, the amount of money you could save in your taxes was not the motivator. I think it's a more meaningful motivator today. The real motivators are, does the donor have a passion for your mission or your programs, or has the donor had experience with the social condition, or is the donor madly in love with the preservation of medieval instruments, musical instruments from the Balkans? Whatever it is, those motivators are far more powerful than saying, oh, by the way, you can deduct $300. But I think what we do now is to say, blah, blah, passion, how your passion translates into our success. Excuse me, I'm kind of spitballing this. And oh, by the way, you can take, unlike last year and 2018, you can, even if you're giving modestly, you can take a deduction of up to $300. And in the economic dislocation we're going through, every penny counts.
Yep.
So I'd
I like
never
that.
use it as a lead, right?
Mm-hmm. Mm-hmm. John,
Right.
how about
So,
you?
yeah, for example, on either reply devices or targeting the lower pyramid of your donors, something like adding that in there and just thank you, and thank you letters,
Right.
FYI, this is
Save this
information.
receipt for your for when you do your taxes. Exactly. I was thinking fine print also.
Yeah, and yeah, you don't lead with this in an appeal, basically, because
Right.
that's not as much of an
Well,
incentive. I remember. I
before
remember.
I have to disagree with you. Never ever assume anything. Always test.
Ah, okay, very good point.
100%,
Yeah.
John.
Very good point. Okay, good call. Good call out on me on that one. But I do and actually that's, yeah, I was wrong, because the reality is that I remember doing a presentation to in AFP Hawaii, and I said, how many of you actually give because of the tax deduction thing? And like somebody did raise their hand. And so there are people that are motivated about this type of thing.
Right.
Alex, actually on that point, in terms of the financial perspective, what do you see in terms of how this folds into how organizations should message around it?
Yeah, it's tricky because finance people are numbers people, right? They're the most likely ones to be thinking about the tax implications of it, and it's a little bit different. And I think the tax implications are more meaningful for non-cash donations, right? Donating stocks and in our case, Bitcoin and cryptocurrency. In those cases, there probably is a stronger tax incentive than other things because they're able to save a little bit on their capital gains tax and things like that. I know I don't want to get too off topic because this is specifically about cash donations, but I think in general, like the others have said, you definitely want to mention it, but it doesn't need to be the core of the messaging when it's something like $300. When you start talking about bigger gifts, like thousands and thousands of dollars, that's when I think it becomes more important to make sure they're getting the tax benefit of making those larger gifts.
And we have some practical questions. I'm going to start with the newer one first because it's pretty straightforward. Does the $300 donation need to be to a single organization, or could be divided among several charitable nonprofits? It's any donation. Anything. So that's the beauty of this. Also, here's another interesting one, and we did get some direction. Neon One is a strategic partner with the National Council of Nonprofits. And so I reached out to them for some guidance, and there was a question that does relate to this, which is, okay, let me just go up because it's really good. There it is. In addition to is this in addition to the state tax credits? For example, in Arizona, you can give up to $400 credit for a qualifying 501. If I gave $400 to a qualifying in my state, can this $300 be deduction for the national? And the simple answer here is that this is at the federal level. So this is when you're doing your federal tax return.
Right.
But National Council of Nonprofits did encourage organizations to look at their individual state associations for guidance on how to kind of implement this and talk about this and see also what's affecting at the state level. Because as the person in the audience mentioned, some states actually do give credits for charitable deductions in their own right too. So getting guidance from your state association of nonprofits, which you can find by going if you don't know what it is, you can either Google your state's name and put nonprofit association, or go to the National Council of Nonprofits website. We did link in our resources section direct guidance from National Council that relates to this too. So you don't have to hunt around, just download the slides, which should be in your go-to webinar interface. So we got some questions flowing in. Okay. John started talking about an increase in the deductible amount for 2020 for those people who do itemize their deductions. Can we go back to that point?
Sure. So if I said that, I misspoke. So right now it's for 2020, the $300 per eligible individual is for non-itemizers only. So for those individuals or maritifyly, jointly, or separately, and they are itemizing right now, that's all that
We don't get that deduction.
they don't get an extra 300. Well, actually, right now they're itemizing, so it's whatever they itemize over, because it's going to be, if you're married, it's over $20,000. If you're individual, so I think 9,800 or something along those lines.
Okay, thank you, Pepper. Okay, sorry, we got a curtain rod that got taken down. So you got Fortnite, I got. I don't know. I'm not sure what happened. So
I know, Tim, I can get away with it.
So from a nonprofit perspective, how do you suggest us advertising this as a tax advantage? Maybe we can drill down into that a little bit more, in terms of even from an appeals process down to the receipting, like a little bit more on the positioning of it.
Wait, this is a question about positioning it?
Yeah, how do you
Or,
advertise this tax advantage?
I think every nonprofit ought to have something in their messaging, like a block on their homepage or something that says our response to COVID-19.
Yeah.
And I would, if you're going to do that, I think that would be a good place to have a bullet item that says, if you're not itemizing your charitable deductions today, you do get this nifty new thing.
Right. And I would also interject that besides reminding them, you can also remind them that you're still, quote, open to accepting donations.
I think that's a big reminder. Yeah.
Yeah, I think that's actually probably the most important lesson, because Ellen, I know you and I go back,
A few years
past
here.
the recession a long time. And the biggest mistakes that nonprofits can make right now is to actually fold up and just worry that, oh my gosh, donors are not going to be receptive to giving. And in my experience, nothing could be further from the truth. Donors know that you're suffering, the nonprofit's suffering. And in fact, the data from 2007, 2008, Tim knows about this, shows that giving actually went up at the beginning of the recession by 10%, before ultimately sliding and declining 10% at the end of the recession. So, and it points back to always testing your messaging, because I never, ever believe what donors say, because donors lie. Yeah, they do. I absolutely believe how they behave. And
how they behave is the real tip-off.
Right, and that is that's always something that I've always remembered. That board members are typically the first people that say, "Oh my gosh, we can't ask," and people have a problem. But in general, you got to make sure that you measure how they behave and how donors act, and that's, as I said, through testing. Testing is
what it's all about. I don't know if FEP data is in for Q1, but based on what I'm hearing from some of my partners who are selling tech into nonprofits, those purchases have slowed down a little bit, but I haven't stopped. So
that's correct.
People are still investing in ways to improve their fundraising.
And this is what I wanted to do, because I think, talking about the Universal Charitable Deduction is interesting, but I also wanted to take it at around this point into the having 3 kids is hilarious. So so I wanted to kind of take it into the larger context of both economic consequences of what's happening right now, and then I also want to talk about social elements. And so the challenges of officing at home. And folks, I want to take this point to stop. I hope you are all okay. I hope that we're doing fine. The thing that I've been saying as a mantra that I've heard is that we are not working at home. We are at home working during a crisis. So no worries. And don't worry, it's almost drink o'clock at some point. So so let's think about this in terms of the larger context. John, we've been doing a lot of great research at the Fundraising Effectiveness Project. What do we think we're going to be seeing in the next few months, basically?
Well, I think we're going to know pretty quickly. So for those that don't know, the Fundraising Effectiveness Project is a free resource and program from the Association of Fundraising Professionals. You can visit the website now, www.afpfep for fundraisingeffectivenessproject.org. And on
Fancy new
there, there's
website.
free,
Fancy new website.
free tools and free downloads of the reports. And so one of the things we've been doing for the last, I don't know, 2 years is aggregating all of the actual nonprofit transactions that are anonymized, of course, and actually looking at the trends over time. And what we've been able to see, for example, in all of 2019 is that giving actually declined. It was basically flat, but it actually declined a little bit.
Mhm.
And so we release this report once a quarter. The Q1 report, and Tim, by the way, is an active part of this. We're both on the steering committee. And this is obviously something that we're going to be heavily watched. I got a first review of the data, and to be quite candid, I literally just loaded it yesterday because we're talking about millions and millions and millions of transactions, and then you have to get rid of all the anomalies, and you have to remember these are as people report donations. So sometimes there's $1 billion here and $1 billion there that you have to kick out. But I do expect that we'll have a report ready in the next several weeks, and that will be very telling. I think what you're going to find is that giving was chugging along January, February, and then all of a sudden March, and that's when they weren't donating; they were buying toilet paper.
Yep.
I do believe that if you look at all the headlines of the giving days that have been out there, record after record has been smashed. I know that Neon here, Tim, you tell us about that because I know Neon has a
That's
giving
a great idea.
I'm just stepping it up for you. But seriously, what is going on? This is good data.
So it is good data, and so what's interesting is that FEP looks at primary data from CRMs like Bloomerang, Donor Perfect, and Neon CRM, whereas giving events are typically not analyzed as part of that set, but might get loaded in after the fact. The idea of a giving day, Giving Tuesday is a popular notion of one, but a lot of communities actually run a community giving event where they're bringing lots of organizations into the platform, and then they're all being able to donate. So this is actually one of the things where it's like community foundations would be great to talk about the Universal Charitable Deduction, for instance, because it's like you could donate to like 12 different organizations and just up to $300, just there you go, So what we're seeing is in Arizona, somebody was talking about Arizona Gives, which we helped kind of partner with the Arizona State Association there to run. They went up a pretty significant amount. I think they actually raised their processed donations by over 82%, like 82% increase in online processed donations. And they actually even established a dedicated coronavirus relief fund that was like on top of that did $150,000 by itself. North Texas Giving Day partnered up with the Dallas Cowboys and the United Way of Dallas, for instance, for Giving Tuesday now on May 5th. That hasn't come yet. They're already over $1 million in their day, and this is like a day that they threw together. Both of those communities typically do their days in Q4.
Mm-hmm.
So we're seeing very, very, very strong surges in giving events in particular. But I did kind of want to hear it from Alex's perspective, because you're playing in the digital space pretty much all the time. What are you seeing on your end in terms of how people are navigating this environment?
Yeah, I mean, I think it's just speeding up the kind of this digital economy, right? I mean, things were already heading digital, and now they had no choice but to become digital in 24 hours basically.
Yep.
So I think things that are digitally native are just more and more important. This isn't going to change even after the virus has gone away some. These are going to start to become the new norm, a lot of these digitally native things. And I think a huge piece of that too is there's going to be a shift in in how corporate giving changes too because of that. I think right now with corporations, they realize the only way they can stand out in a time like this is when their messaging and their advertising incorporates, for example, COVID relief, COVID response efforts. So I think there's going to be a huge shift in how those ad and marketing dollars are spent, and a lot more, maybe not short term, but I think medium longer term is going to be moved towards kind of the CSR departments as kind of the new norm of advertising. And I think we're already seeing that a lot, especially in the tech community. And with cryptocurrency, especially right now, we've seen a huge surge in Bitcoin and cryptocurrency gifts over the last few weeks. And that's a little different, of course, because it's considered property, so it's a non-cash donation. But I think for those kind of donations, people are actually more likely in times like this to donate property and non-cash gifts first, because in economic times like this, cash is kind of king. At least short-term people want to feel safe. They're, I think, a little more hesitant to give up their cash and would rather donate some assets first. So that's what we're seeing on our end. But I think it's going to be really interesting to watch.
I did see a joke about corporations, which was car dealer, like car manufacturers before coronavirus. Buy a car. After coronavirus, we hope that you are staying safe in at home. Buy a car. And so, so there's some that are navigating it better than others. I think we've probably burned through all the pre-scheduled campaigns that didn't get fixed after this. I think even some nonprofits. What was the big one that I remember hearing about? And this is the thing where we have to. What I'm hearing and what I'm seeing in some of the studies and chatter that I'm talking when we're talking about how nonprofits should start to message this, the overall environment, is that we're past the point of you need to donate to help us survive. People are like, that message is starting to burn out. Now it's, what can you show us the future? Show us the future of where we need to go. So Ellen, let's kick it over to you in terms of how should we start to change our messaging shift? And I'm going to check some questions.
With all due respect, could I ask John a question about the adjustable gross income? Actually, not the AGI, but the raised cap on corporate charitable gifts.
Yeah.
Because and this is a little bit. I hope I'm asking this the right way. Corporations are suffering, especially smaller businesses, but nonprofits are really suffering. So is there, if nonprofits can pivot a little bit to take advantage of this increased cap on charitable giving in the corporate community, what do you think the longer term impact on that's going to have?
Oh, if you want my honest opinion, which you're going to get,
which we're going to get, so that's what we want.
I think that this increase from 10% to 25%.
For 1 year.
It's going to be a minor drop in the bucket, and that is because I don't know of a single public corporation that approaches anywhere near more than 1%, let alone
10. Yeah.
Right. But what does happen is that there is a huge long tail of a number of corporations and S corps that are formed in the United States on a near daily basis. Many of these are people who really, it's really not a real, quote, a real business, but it's an entity, an LLC or other thing that is set up to manage the real estates, and these are for your major donors. Your major donors are typically will have they'll be on the boards of multiple corporations of which they have either majority ownership or other types of ownership. If they really want to keep secret, then they'll definitely have shell companies and other things like that. And typically in those cases, that's where major donors will have a company that has done well or otherwise have gains, and they can then take an advantage of that corporation and to make a donation. So I could see certain situations where, but it's basically playing a game of money.
I see your hand gestures there. That's the old record Monty. So if I can go back and talk about this for a minute, I think the economic consequences of COVID-19 come back to some research that my company does, which we call the leaky bucket assessment for effective fundraising. You've seen it, Tim. I think you've seen it, John. And when we started this study right at the end of the Great Recession in 2011, and the numbers have just gotten worse as we've gathered more data. We've got about 2,000 samples in the study so far, and we measure 9 practices that either contribute to or detract from the productivity of the fundraising team. Well, 94% of our respondents fail to have a documented ideal donor profile that includes giving motivations. 70% of them fail to have documented performance expectations for donor retention, stewardship practices, upgrading practices. So, and when I first rolled up the data and wrote the first report, when we had a grand total of 70 and then 400 samples, I remember thinking, you know, no wonder so many small nonprofits either were anorexic or went under during the real estate bubble and burst. And so we don't have much control over the global or the national economy as individuals, do we? The only control we have is over the way we tackle those problems. So I'm, you know, always out there on the hustings beating the drum that nonprofits need to think more, let's use Jim Collins' phrase, about the disciplines of greatness. Be more rigorous about understanding how to interface with their donor population and prospective donors, and work harder to fund the operation. God knows what it's going to look like 6 months from now or a year from now.
So that John, I'll open it up in a moment, but I think that does transition into the final kind of pre-canned question, which is, what are the larger societal consequences as they relate to nonprofits? John, I'll kick it over to you, but I'm interested to hear from everybody, but you know, Alex in particular, I think, is going to have some unique perspective on this.
Yeah. Well, Alex and I are probably going to have to agree to disagree.
That's all right.
Fine. That's the nature of the beast.
That's why I have everybody together in this. Great.
Because I don't agree with Alex that everything is going to be going digital right away. Never underestimate the tenacity and the molassesness of how donors act and behave.
Human nature is conservative, basically.
Yes, and this is backed up just based on experience. I remember when I launched Donor Perfect, it was in 2000, and it was web-based, and people would call up, and they didn't even have internet, and they wouldn't have internet for many years. Email in the nonprofit world really wasn't widely adopted until I'd say 2000 and I don't know, 3 or 4. And so it doesn't surprise me. And really when we look at all this, it really has to do with the demographics of who is the end consumer, really the end donor, and how old are they? And the fact of the matter is they are boomers. And for that reason, technology comes a little bit slower. I think it's going to be accelerated. But the other pathway is that it's still today, one of the things the Fundraising Effectiveness Project has told us, and it keeps on increasing, because Ellen's correct. If the amount of household actually participating in giving, so the donors are decreasing, yet we understand from Giving USA Foundation that total donations is staying the same or keeps increasing every year, that means that fewer people are giving way more money. It has to be that way, and that's actually what's happening. So a lot of people know about the Pareto principle. It's 20% of the, or excuse me, 80% of the value comes from 20% of the people, 80-20 rule. Well, in the nonprofit fundraising world, it's actually closer to 10-90, meaning that 90% of the donations come from only 10% of donors. And when that happens, these people are making 5-figure gifts, and they're, while occasionally, when I was with Donor Perfect, we'd get the occasional $25,000 Amex Black Card. I think the largest one I've ever seen is $100,000 donation that's come across. And by the way, one of those was fraud, so you have to be careful with that. I can go into stories about that. And the reason is that these larger gifts really make up the bulk of all giving, and they're done via checks. People write checks, and that will always stay the same. They might be doing ACH transfers, but which is why online giving in over the net, mobile phone, whatever, it's about 10% of the 400 and change billion a year, and it will never ever be more than 20% in our lifetimes. And you heard it here first.
Alex, proclamation, John. Well, I do want to give Alex a chance to weigh in here, but I will say that Neon One did an analysis of Giving Tuesday and overall December giving in our ecosystem, and we broke it out into the typical buckets of small size donors about $250 and below, mid-sized donors, and then which is between $250 and $1,000, and then $1,000 and above. And when we analyzed online versus offline, we found that online givers in the high net worth individual side, average gift was about $1,900. Offline gift, $19,000. So
that's pretty much what I'd expect. Although I do think by the time you're as old as some of us, Alex, we won't be around.
Maybe Alex is our hope for seeing it in terms of the lifetime.
We don't know what it's going to look like 6 months from now, so we don't know what it's going to look like 10 years from now. But
Alex gets a chance here. Go ahead.
Okay. And real quick, before I jump into what I wanted to mention earlier, Tim, do you think some of those differences in the offline donations is because there's also non-cash donations? Maybe was that included in the data?
That we specifically, we didn't drill down in terms of the tender. I didn't ask to look at whether that was like stock, for instance, or property. So I see where you're going with this too. Short term, I guess I tend to agree with John, right? This isn't gonna change overnight, maybe in terms of who's donating what proportion of donations. But I think, now more than half the workforce is millennials. There's a huge wealth shift happening. And it doesn't happen overnight, but we're at a point where there's going to be 68 trillion of wealth inherited by millennials over the next 10 years from baby boomers. And I think as that continues to increase, that's going to have an impact, I think, on how donors think, how they behave, and how donations are made. So I guess I disagree that things aren't going to change in our lifetime, basically.
They'll change. Make no mistake, they'll change. I just don't think it'll be over 20%. Will be online. That's all.
Are you guys going to take a bet on that? Are we starting a pool? What's going on?
My standard bet, Alex, is one beverage at the next AFP conference. Your choice.
All right, that works with me. And I guess kind of an interesting, perspective I would add too, and this certainly isn't representative of the whole market. But our focus is Bitcoin and cryptocurrency donations, which doesn't necessarily make up a huge portion of donations right now, but it's trending in a big direction. You'd probably be surprised to hear that there's hundreds of millions of dollars each year donated just in Bitcoin, and that's just what's public. And part of that is because of the tax benefits, because it's treated like stock donations, and often these are actually younger donors, people in their 20s and 30s who run tech startups, run tech companies, and have benefited from this big Silicon Valley boom. I think that's kind of an overlooked demographic pretty often.
And I will say I'm probably personally more in the middle, right? I'm an optimist of digital, and I'm a big fan. I mean, that's why I have everybody on this call. But you know, and Alex is getting me sucked into the Bitcoin world too, in terms of like understanding that. But there is good data to show in terms of overall usage of devices and things like that, that generationally, even boomers on down, people are getting more comfortable with technology. So I think that this might accelerate the numbers a little bit more than what John expects. But also having worked for nonprofits for such a long time, I mean, my very first job, or one of my first jobs before working at Neon, was I worked at a Catholic school, and if a credit card donation came in online, it gave it through an unencrypted form, which I then printed out the sheet, walked it over to another building, and then went up 3 flights of stairs and entered it into a Fifth Third banking interface. Luckily, as soon as I saw that, I'm like, this is nutso. We can't do this. And then we got a properly PCI compliant thing. So you know, it's all good there. But like that was like 12 years ago. You know, like, so things are changing rapidly in our lifetime at this point, though, I will say. But John, you still look skeptical.
Because it's the law of large numbers. Right now there's still hundreds of people on this call, and I bet you a lot that 10 or 15 of them are still have an unsecure way of giving on their website. Typically, it'll be like, oh, you want to make a credit card donation? Great. Download this PDF form and fill it in and send it in email.
No, hold on. Tell me your credit card number.
And for donor advised funds, in order to even set up a lot of them, that you're still going to have to download the PDF, send a physical check that says like void on it. So there are structural elements, and that's actually what I think is going to be. Hopefully, this is what I hope we can see out of this. Maybe we spend, you know what? Let's spend our I've been asking a lot of people this question, so I'm going to actually ask it to this group. Where do you see everything in 5 years? And I'm going to start with Ellen. Where do you see everything going in 5 years?
I'm afraid I have a somewhat gloomy prognosis. I think the economic consequences, the follow-on consequences of a global lockdown, followed by there's going to be impact on food supplies, everything that people require just to stay alive. If we think back to the Great Depression of the 30s, the US and much of the rest of the world was in the deepest of trouble economically until World War II came along and, in a kind of grisly way, created economic opportunity and created the American century. 5 years from now, I think an awful lot of businesses are still going to be in recovery mode. I think nonprofits are really going to have to reinvent themselves. The need for the services that are provided by the nonprofit sector, certainly in the US, are not going to get smaller, they're going to get bigger. But finding the funding for them is going to require that those who work for or volunteer for nonprofits really are going to have to step up their game, whether that's digital, not digital, or it's just the human effort, I think. So I have some real concerns about this. I think the US is a charitable nation on the whole.
Mhm.
But it's hard for me to think of a nonprofit sector that's not going to be affected long-term by the long-term consequences of this illness.
Alex, I'll kick it over to you to follow that.
I would love it if you
yeah, no,
I know. Wait, this
So-
is. We need to have these honest conversations with ourselves. So, Alex, I want to hear you. Where are we going to be in 5 years?
Yeah, so I'm a little torn on this, and I kind of hope I ultimately end up being wrong, at least on this first piece. But I agree with Ellen that it's a little bit of a gloomy outlook. And the way I'm looking at this is there's a lot of broader economic issues going on here. I mean, if you look at just the unemployment numbers, over 20 million claims, right? That doesn't go away quickly. That takes a really long time for those jobs to come back. It could take 5 years or maybe even longer for those jobs to come back.
Exactly.
And I don't see that job loss slowing down. I think it's certainly getting worse before it gets better. And I think the government and the Federal Reserve and other international governments as well are running out of tools to kind of stem the financial issues that we're seeing and the economic issues. And I think it's really, when things like this happen, people are almost forced to have a crash course on, what are economics? What is supply and demand? What is money, right? That's when you start seeing people buying gold, and you see gold going up because they start worrying about inflation. When they hear the government is printing essentially $2 trillion, right, out of thin air, people really start to question it. And that's why on our end, we're starting to see some of these things play out in the sense that there's more activity than ever before on cryptocurrency exchanges. People are depositing their stimulus checks to buy Bitcoin because they're so worried about inflation in the next couple of years. There's a spike of people depositing exactly $1,200 to buy Bitcoin in cryptocurrency. It's amazing. But ultimately, I think, in the next 5 years is when we will seriously start to see some sort of crisis with kind of the traditional financial model, whether it's hyperinflation or something like that. I think that's a very real thing that could happen. But it's too early to say exactly how it's going to play out.
John?
So that's my rant.
So I showed this sign, and I'll say it again. But I am a natural optimist. I really am. And having survived 1, 2, 3, 4, this will be the 5th major economic downturn in my quote working career since I was 16 and lost my first job in 1987. And I look at this as actually a time of opportunity. Ellen actually referred to this when she was talking about the fact that now's a time to build those donor personas, to make sure that are you doing what I call oatmeal topics, and people know it's good for you, but no one wants to talk about it. Board governance, things like this that make strong nonprofits. Those nonprofits that are able to adapt and do not stick their their head in the sand. That's an interesting metaphor.
Sand in the head.
Will absolutely succeed. I've seen it time and time again. In fact, one of the things that if I was running a company, I'm running my own right now, but I'm advertising left, right, and center because other people aren't. I want to make sure that the brand is out there. I want to make sure that so when the pendulum swings back, and it will swing back, in my opinion, that nonprofits will be ready. They'll always be listening to their donors. And the worst thing you can do is give your donors a rest, because donors that are given a rest stop giving. It is simple.
That's the worst idea in the world, to give your donors a rest.
Yep.
Yes, I think we're all in agreement there. As for what's going to happen in 5 years from now, well, I keep doing wrong. The Phillies, they'll be off their second world championship. Gold will still be at around $2,200 an ounce, and Bitcoin, who knows? But I do think that Alex is right. There are hundreds of millions of dollars that are being given in donations with Bitcoin. There's no doubt about that. So I think it's up and coming. It's going to be going up, and I actually think now that we've gotten, I believe, through the worst of it, that things will get better. And not worse. But that's me. I'm an optimist.
I mean, I didn't plan it that way, but I think it went like the flow for perfection there. We had a lot of great questions, and there were some auxiliary questions that we weren't able to dive into, and part of it is because questions about Giving Tuesday Now, for instance, we've actually created a ton of resources. I'm sharing the handout, but if you go to neon1.com, go to our NPO's Rise campaign landing page, because we talk about Giving Tuesday now. We actually had a webinar with the folks at Giving Tuesday to talk about how you should approach that. Interestingly, there was some great discussions around taxes and you know, required distributions and stuff like that. And you know, this panel's great, but we're actually going to go kind of one bigger next week, May 1st, a nonprofit toolkit for dealing with COVID-19. We're going to have a deep dive with our friends at QuickBooks Made Easy, the top CPAs for nonprofits. So sign up for that. You can find it in here. We're going to put it on the website too. You probably get an email. And that's like, we drilled really deep into today in terms of the UCD to kind of unpack what that means for the broader ability to kind of create a culture of philanthropy, which I think ultimately the UCD is where that stands, right? You use that as a tool to just generate excitement around giving, right? It's just one of the many tools in your tool set. But what we're going to do next is go a little bit more macro and look at kind of the entire CARES Act and all the different things that how it might be affecting organizations and individuals. So was the first give. Every single one of these is being recorded. So absolutely, when it comes to that, folks, I want to thank everybody for joining. I want to thank everyone for setting aside time to, oh, cool. Awesome. This is not a question. This is one of the most informative conversations. So thank you very much for our panel. I've been looking forward to this one for a while now, and I think this was just a lot of fun. Folks, we will be following up. And again, I want to thank everybody for their time, not just our panel, but the folks. Yes, go ahead.
Interrupt, Tim, but thank you, Tim. And also every single one of us, if you're still on the call, link out to us to LinkedIn. We're real people. We're in hiding. We'd love to connect with you.
Yes, please.
So look us up on LinkedIn. And thank you, Tim.
Awesome. Well, thank you so much. And we've been linking out to resources. The Fundraising Effectiveness Project, we put it in the Q&A section. Other, you know, direct unpackings of all of this. So awesome. Okay, we're ending Friday on a high note, folks. Get ready for your happy hours because you know, we made it through another week and we're going to be able to do it. You got your Coke. Okay, thanks.
I got my water.
You guys, yeah, it's a tiny bit too early. I did bake my bread. I did bake my bread with beer. So I will be baking. My wife just, okay, thank you, everyone. Have a good day. Good weekend, everybody.
Thanks, Tim. Thanks, everyone.